Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a look here at Bitcoin, seeing what's going on, helping understand, what's going to happen next. We got Elliot Wave here kind of giving us the conclusion that we're hitting our ABC pattern. Obviously, we don't know how much lower this will go, but generally speaking, we can tell that this has come to fruition. So in that case, we can kind of summarize here that we may see a bounce here soon, or we could see a sideways action and then further bleed out. Keep in mind, we talked about this yesterday. We have a lot of liquidation levels here at a certain price range, and we want to talk about that too. So if you're new to the channel, I'm not a financial advisor. I truly hope you can learn something here today. If you want to become a better trader, cryptocash.tech is the website. Link down below where you can learn how to become a better trader and join in on our trade signals. Got some really cool signals here recently. Lever, we took 120%, all targets achieved in 7 days. And of course, Avalanche, that trade is still open at about 51% in 2 days. Well, more so 3 days. That is basically, those are all shorts, by the way. So we're fairly short heavy right now. No shame in saying that, honestly, because it's just the way the market's moving, and it's safe to presume that Bitcoin was going to lose its descending trend. You caught my analysis yesterday. We talked about the reasons why holding a long position right now is not ideal. Okay? So again, all the more reason to watch this through to the end, because I think there's some important stuff we want to talk about. We're going to look at the weekly chart and, of course, work our way down through high block capital here. So let's go ahead and get started here without further ado. Let's see what's going on. So first and foremost here, we can kind of see with the current price action, this kind of just liquidation levels that we've known for a little while. But generally speaking, I think it's important to recognize that this is getting closer than you might think. 25,600, we got a tremendous amount of liquidation at that range, and also 25,200. Okay, we'll see that on the heat map here in a minute. But generally speaking, that is a strong, strong area. We do have some short liquidation levels here forming about 27,500 and a little bit higher. So it does imply that with those 50, 20, 30x leverage positions, they're all kind of hedged right there above the price action. So shorts are making a killing right now. Okay, it's just no other way around it. If we take a look here at open interest, let's go ahead and take a quick peek at open interest and kind of see here that with the long positions, you can see there's a lot of longs underwater. A lot of longs got liquidated here at about 26,800 as a rough estimate. Those were some trying to, holding their positions just below. And if you saw the video from yesterday too, you'll know that 27,000 was kind of a make or break point. Now that we've broken through that pretty soundly, mind you, there's a good chance it's going to be a new resistance level. Okay, so just bear that in mind. But based on this here, you can tell that longs are struggling and shorts breaking it in. A lot of good shorts right there in that range of low 27,000. So while they're late shorts, they still are successful at this point. Now here's this monthly here. We'll go ahead and zoom in a little bit, just kind of see what's going on here, and just kind of clarify what this basically means. These are like the areas in which we have the most amount of liquidation. In other words, when you open a long 20x leverage trade right now, the liquidation level will be within 500 to 1,000 off of what your current price is, right? So a few percent below. Again, depending on your margin, of course, but generally speaking here, we can see at 25,300, we have the most amount of liquidation levels in the last month accumulated at that range. So it's very, very common for whales, manipulation, candle wicks to occur to wipe out those longs and the price just to reverse itself or to inevitably return to where it came from. So I would not be surprised if we break down below 26,000. We're going to see a run towards 25 and 24. I actually have limit orders sets at every 500 on the way down here, just so I can continue to get filled. And the lower the level, the higher the amount I'm adding to the bag. Okay? So again, while I think that we could see a potential bounce here in the 26,000 range, there is a possibility that there is more likelihood for this liquidation levels to be hit, just based on the way that market movers are. Everyone's kind of hyped up for October and all that, and it would make total sense that they come in here and just wipe out the longs. Okay. So just know liquidations occur frequently, and we're going to see maybe a few more liquidations here in the near future. I think that's a possibility. But is it a probability? Let's find out. Okay, so let's talk about the weekly here. Weekly is fairly ominous. In fact, let's go to our older chart here, our Bitstamp chart, and just kind of touch on a few key factors. So looking at the 20 and the 200-day simple moving average, we can see here we're below both, right? 20,000 strong, firm resistance level. Yeah, I've been mentioning it since 28,000 that, hey, it may be safe to consider the price is going to drop down a little bit further. By the way, I'm not a perma bear or a perma bull. I basically shift with the market and understand that it's important not to attach yourself to certain bias. So right now, if you're thinking and convincing yourself that we're just going to shoot to 30,000 and 35, 40,000 in the near future. I think that's not the right sentiment. Again, it's best to be prepared for either direction, but it's also best to be realistic too. Okay, so a good trader will adjust with the market and not get stuck on one bias or the other. Okay, so try not to just buy into what you see with everything, including me for that matter. Take your own understanding and apply what you learn and use it in your own way for your risk tolerance. Anyways, enough about that. What I'm getting at here is that we're below key level resistance. So once we break above 28,000 soundly and close above that level, that's when I'm going to feel more confident. Right now, it makes sense for the price action to continue down, potentially retest this 50-day SMA. Okay, so 50-day SMA is trading right at 25,000. What do you know? Wouldn't be surprised the price comes down here, wicks all the way down to like 23 or 24, and then just instantly responds to the market. Okay, because again, November is notoriously a very, very strong month. In fact, I sent out an article on my Twitter there for that. I'm not going to try to bother with defining that right now, just because we got plenty of posts here. But I can tell you that it is important to recognize that is definitely a thing. Okay. So what I want to summarize here with is that we've broken below 50 on the RSI. This isn't official, by the way. This week is still halfway over. We got 4 days left of this trading week. So in truth, we haven't officially broken below that. But this is not a great sign. Peaking below that level leads us to believe we could see the price continue lower. Okay. We also can see here on the MACD that it's still diverging and we don't have that upward momentum that we're looking for. So in all reality here, the weekly is fairly bearish. Okay. And the reason why that plays in here is because, again, the daily, while this is all well and good that we're bouncing or potentially going to bounce off the 50-day SMA at 26.6, it's been notoriously a strong support level. We can recognize that we're below 50 in the RSI, and we could continue lower. Furthermore, we also want to take a quick peek here. I mean, TD sequential, we're kind of just new into this trend here. And keep in mind, Bitcoin hasn't been hitting a ton of nines here recently, so it's not like it's super consistent for Bitcoin to be cranking out full overextension. We've been kind of range bound in a weird way. So I'm not super convinced there that we're going to continue to run, but it does make a lot more sense if we take a look at a few other factors. So let's talk about the, I guess, Elliot wave in the room. If we can see here, of course, we saw previously this Elliot wave has kind of come to fruition. There are new ones here. Actually, technically, if you look at this other chart, it's going to give us a slightly different summarization here. And the main thing to take away here is that we could very well still come lower. Okay? Now, again, just because this says it's going to potentially happen doesn't mean it will. But in truth, Elliot wave is fairly accurate. Okay. Again, this chart is a little bit more specific. This is more of a standard futures chart versus a traditional spot chart. Keep in mind they're going to have slightly different results. But what I'm getting at here is that on the daily, we can summarize that being underneath, closing below 50 on the RSI is disadvantageous, and swinging bearishly here on the MACD is also a bearish sign. Okay. So keep in mind, manipulation does occur. A lot of times they'll push the price action down like this, get you to believe it's going to go lower, a lot of shorts into the market, and then they wipe you out. Okay. But this feels a little different. The key takeaway here is if we cross this most recent low at about 26,200, then we're in for some trouble. So again, we are still establishing higher lows, barely. Okay, so just know if we do not hold this 26.5 range, it's gonna be a a freak show. Okay, yeah, use whatever word you want in that range, but you get what I'm getting at. It's gonna be a mess. Okay, so the thing we have right now, the only consolation is a 50-day SMA, and you don't take trades on consolations or just one positive thing. You look at everything here. And in truth, if we look at the bigger picture, there is a lot of volume at 26,000. So there's a solid chance the price comes down to 26,000 minus any potential candle wicks below that level. That could very well hold. Because again, I'm a firm believer of volume being a very strong indicator, and it's oftentimes very much overlooked. And with us getting closer towards that support level here, we're in better shape than we could be if the price gets below that. But if we zoom out a little bit here, let's just kind of be realistic here. Obviously, we know there's a lot of volume at about 17,000, 15,000 range, but just below 26,000, the second most amount of volume is about 23. So hypothetically, we lose 23,000 would be the likely next target. I would welcome that personally. I know it sounds crazy and kind of morbid, but I just like to be able to add to my spot bag before the next leg up, and I do feel like we're going to see some positive momentum in the next couple months, but right now it's certainly looking like it doesn't want to do that. All right, So what we want to look at here next is the 4-hour time frame and just kind of start wrapping up here. So on the 4-hour, we can see that we're working pretty smoothly with these Fibonacci levels, right? Price wicks down, hits 0.5 in Fibonacci a few times, eventually breaks through that. We can assume that that's going to be a new resistance at 27,200, comes down, tries to retest it, gets rejected. Now we're down at 0.786 and we're at 26.5. So these have been levels we've been expecting for a while. Again, we got a lot of liquidation at 26.5 that previously occurred. A lot of liquidation still to occur at 26 to 25,000. So if the price continues lower, just know we probably see a very aggressive candle wick. It may not be quite as bad as this guy here. You recall that, the whole Tesla thing. But for lack of better terms here, we're looking at a strong potential reality for that to happen, like a liquidity sweep, if you will. Take a look at liquidity here as well. There's not a ton of liquidity, but we do still have a fair value gap at about the 25,300 mark, upwards of 25.8. So again, this is where the most amount of liquidations could occur. So what's to stop the whales from wiping the price action out there and just having free reign to blast the price higher? Because again, this whole process of wiping out a bunch of longs gets us concerned and timid to take a long position, especially when you liquidate, $500,000 or 500,000 liquidations at one time. What happens is that shift in momentum can occur. The price will just ramp right back up, like we've seen multiple times where the price dips and then jumps right back up. This happens because of the fact that there's a shakeout. And in this situation here, the longs are getting more and more nervous as the price goes down. They ramp the price back up. Late longs come in, they wreck you again. It's a very, very rinse and repeat situation. So you can kind of think about how they're anticipating this. It would make a lot more sense for them to push the price action down just a little bit lower to liquidate a few more levels, and then to just go ahead and go on a rally with no resistance in sight. Just something to think about. Okay, taking a look at the hourly here, last but not least, we're just going to confirm that we are definitely on the bearish side of things. If you have a short position open, this is basically telling us we could and should still leave it open to continue to take that profit. Okay, so again, I have a small short position myself open on the back end there. And then, I tried to send out a signal to our community, but unfortunately that trade got canceled because we had that last little wick up to 28.5. So the truth here is that if you have a long position open, I would just be very careful having high leverage or high amount. Okay, it's important to use low leverage and low position sizing in these situations until we reach our true bottom. So I'm going to feel much more confident about a 20x trade. Price comes down to the 23,000 to 24,000 range versus right now when we're on the edge of disaster. Okay, so just know right now, Ichimoku Cloud is telling us if we go lower, it could very well happen. So leave your shorts open. Don't take profits just yet, but consider taking profits in the next 12 hours. The price cannot surpass 26.5. That's kind of what it's saying here. So hope that makes sense for you. All right, I know I covered a lot. Comment below, like, subscribe, all that good stuff. Really appreciate the wonderful feedback I've been receiving too from my community members for the signals, as well as just in general being part of an awesome Discord. We got some really cool people coming over here, some awesome traders too. I mean, take a look at this here. Very well done. These are some really, really cool people that are all part of our group. So jump on over there if you want to be part of something bigger. And I definitely look forward to working with you. I hope you all have a great rest of your day. We'll look forward to seeing you in the next one. Take care.